is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. Always do your best. Take action on your ideas. Doing your best means you take action on your ideas. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials up 336. You get the NASDAQ up 54. S&Ps are up 22. You get percentage-wise out here, Dow's up 1.3%. NASDAQ, S&Ps, they're up 0.7 and 0.8 of 1%. Gold contract's up $4.10, trading at $12.59.90. We have silver up 8 cents, $16.15. Let's go over to that silver contract first. We take a look at silver. So you had both these contracts, folks, got out of their trading range. Silver's trying to make it back inside it right now. We are at $16.15. It's real about $16.28. That's what silver's going to need to get back inside its larger range. Thus far out here today, we've done 58,000 contracts. Now, that's good contract volume inside the silver market. We go into the gold market. We take a look at the gold market. What you have with gold contract is this. Gold contract right now is trading at a price point of $12.60. We came off the lows last week. We had some strength off the lows. You have 222,000 contracts, which isn't bad. Bottom line is that you still get a lot of sellers inside this gold contract. GDX, we take a look at some of the actual equities. GDX out here got to a price point today of $22.93. Couldn't handle it. Bottom line is that this is going to get interesting because this is not something I really wanted to see with 14,000 shares. We'll see where this shakes out at the end. They'll put some volume into this at the end of today, and I'd like to. We'll see what kind of volume they put in. That's the bottom line. Because what you did have here is that you got to a higher high. You get the volumes light, couldn't handle the price. That could set up GDX. It's not down a huge amount, but 22.40 could be the number, and right now we're at 22.58. Notes and bonds, we take a look at the note and bond. Now, this is where this gets wild. And what it is that the note and bond markets still want higher price. You know, what we did out here today in the 10-year is pretty amazing, actually. So the 10-year has pulled back 7 ticks. You have 685,000 contracts. That is anemic contract volume. You're pulling back into 1 million contracts. So the 10-year is saying it still wants to run to this May 30th high. May 30th high is 121.03. The 30-year, what the 30-year had done, folks, on Friday is that it got over the May 30th high. It did have lighter volume, couldn't handle price. We got to a price point up there of 146.11. Now you're backing down today, and you're backing down with 147,000 contracts. That also is really light volume. I believe we're going to be going into about 235. You're going into 235. So that baby is continuing to say that it's going to build some cars to try to get up and over the 145.28 once again. King dollar. So King dollar. King dollar back down today. You had light volume in the back down. Rejecting lower price at this particular point. And where King dollar did break out from is 92.820. What we did have last Friday is that you did come down, and King dollar did have volume as it was coming down. We did 19,000 contracts. Now that, no doubt, is a lot of contract volume, particularly for a Friday, you know, in the summer. That's how that comes down to. So next couple days, this King dollar is going to basically, you know, which way this goes is going to basically tell us a huge amount about the metals market in general. Some of the higher volume equities out here today, and we will have a low volume market, is that you have Twitter's down at 239. You have Bank of America up $1. Yeah, let's go to the XLF, because what has happened is that the XLF caught a bid out here today. The banks are going to be coming out with numbers, I believe I'll pull JP Morgan up. I believe it's the end of this week, the beginning of next week. XLF is up 61 cents right now, trading $27.28. If we go into JP Morgan, we take a look at JP Morgan, what you're going to see. JP Morgan, you're up 325. You've done 10 million shares, which is not bad. And this came down and did test the February 5th low. That February 5th low is a big deal right across all the markets. You know, we had gone down 103. That was on February 5th. We go back topside to 119, and then it took about approximately 5 months to come back down there. We rejected that lower level, and we did that last Friday. Citigroup, JP Morgan. JP Morgan's coming out with their numbers the 13th. Today's the 8th, right? 8 and 5 are 13. Yeah, so that's going to be Friday. I believe that's Friday. We go take a look at Bank of America, BAC. Bank of America right now, that traded, that's showing strength too. That's up $1. That's at 29.03. Now that's got to get back inside 29.15. So that hasn't got back inside its higher range yet. Same type of setup. You know, it got under those high volume lows, couldn't handle price. Citigroup, we take a look at Citigroup. Actually, let me go to Bank of America, let you know what date that's coming out. So that's coming out the 16th. So that's going to be Monday. Citigroup, we take a look at Citigroup out here. Citigroup's trading up $1.82. And that's also showing a sign of strength. Now, Citigroup is down from 80 bucks. We're at 68. But bottom line, you know, we'll see whether it can basically continue to get into higher price. If we take a look at the volume, as we're hitting the 315 mark, it's anemic. We're in the NYSE right now at 383 million. That's saying that the NYSE actually is going to do maybe 575. And if that's what you have on a big up day like this, that's going to be problems in paradise. We'll see what kind of volume they put into the close. Now, on a day like today, we're going to get the Dow up a 1.5%. There's no reason you can't put some big numbers into the close. NASDAQ is up, it has 1.3 billion. So NASDAQ will do the 1.7, 1.8. Dow Industrials right now up 333. NASDAQ up 54. S&P's up 22. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at some of the commodities out here inside the marketplace. So gasoline, folks, is up 2.1% today. Of copper up 1.5. Unleaded diesel is up 1.4. That's on the upside. On the downside, lean hogs are off 4%. You get beans off 2.5%. If we go over to the lean hog market first and see, well, that's quite a drop. So that market has gone from 72 cents a pound to 56 LH1. We bring this back a little bit further inside a continuous contract. Let me see. LH1. Lean hog. Generic. Let's do that one. There we go. It doesn't look at 1 second. I'm going to have to, I'll bring that up at the next, it doesn't seem to be coming up correctly. We go over to the gasoline market. Let's take a look at this gasoline market. So you get unleaded right now, trading $2.15. You've done 44,000 contracts. Now this has been lagging the actual barrels of oil. That being said, you're at the top of this range here, which is at 215.75. So it looks to me like that thing's going to try to make a run out here tomorrow. The volume's contracting, but guess what? The price is not pulling off at all. If we go into the actual crude oil traded up to $74.28 today. That's hanging at these highs, and you know it has some juice underneath it. So anything above the 72.70, saying this very well could be building cause. And when you see this, this is where this gets really wild, because if we break the 75 area, 75 to 770, 75 to $77 area, we can be right back at $100, because that is what's stopping this right now. And it was the lows of 2011 and 2012. Those lows are laid out at $75 and $77. The way this is moving and building cause at this particular point, though, because we've been here for 3 weeks right now, saying it looks like it wants to get through that. If we get through that, you're going to be talking about $107 barrel of oil. That being said, if we go into the XLE, And this is where there's still some divergence here. And the XLE right now, you're up $1.12. You know, bottom line is that hasn't been able to take out its highs for 6 months, where oil is taking it off topside in a big way. Your swing point up here on the XLE is $79.41. So you get about $2.75 just to get to that swing. If we take a look at the two largest weightings inside the XLE, you're going to have ExxonMobil. That's coming out with this numbers on the 27th. And Exxon, bottom line, up 58 cents, but last high for 6 months ago was $89. You're at $82.91. We take a look at Chevron. Chevron out here up $1.85. Last high last 6 months though is up there at 133. You're at 125 right now. We go over to ConocoPhillips and look at ConocoPhillips. That's up $1.30. Trading at a price point of a 70.95. Now, this one's going to get interesting. We had our man Jason Paff on this morning with Tommy and I, and he was talking about the correlation between ConocoPhillips and Brent crude. This is a much better chart. It's really interesting, actually, just looking at this. You know, the all-time high is up here at 87. You're at 94. That being said, though, what you do have happening is that this is not backing off at all. And so they are coming out with numbers the 26th of July. So lots of numbers coming out in a huge way. We go take a look at the XLK. And what is interesting out here today, so check this out, folks. What you have, this is one of the first times that you actually had a Dow Industrials that was stronger than the NASDAQ. So you want to keep your eye on this NASDAQ, because if we go over and we take a look at the composite, you know, the composite is right at its highs. The high in the composite is at 78.06. We've hit 77.44 today. And it looks like, yes, that wants to be tested. The NDX 100 also looks like it wants to test the high. NDX is up $50 right now. The high is 73.09. We've hit 72.64. All you need is one more day like today, and you're going to go after that high. Inside the NDX 100, the strength versus the weakness. Your strength is Baidu, that's up 4%. Ultra Salon is up 3.4. Fastenal is up 3, and you get American Airlines up 3. Taken away from it, C-Trip is down 1.6. You get Take 2 off 1.6. Kraft Heinz is off 1.2, and you get Biogen down 1.1. Biogen, that's nothing, because Biogen on Friday, bottom line, you talk about went to a price point. That went from a price point of $295, and then it opened at $367. Pretty amazing. Big number, no doubt about that. Now you get that thing backing down slightly, but you're backing down with light volume. More likely what you're going to see is it's going to build some cause to get up into those highs. Small caps, if we take a look at the IWM, that's up 82 cents. You're trading 169.07. Bottom line, your high up there is 170. And when you get this close, yeah, I expect we're going to go up there and hit that baby. The TWTI Twitter was down as much as $3 today. This has volume. Now, this is going to be pretty deviant, actually. Twitter came off its highs with volume. You get 98 million shares. So someone's laying out and selling, bottom line, lots of shares inside Twitter. That's always dangerous, particularly when you're at a high-end consolidation, and you get an equity that went 3 months from $26 up to $47. So you get an expansion of price that's pretty amazing in a short period of time. You still have the aspect that when we take a look at the revenue models, you know, they're growing, but they're not growing like a Facebook. That's the bottom line. Is that 2017 did 2.4 billion, 2018 2.9, and next year they only plan on doing another couple hundred million, 3.3. Listen, would I'll take that type of growth? There's no doubt about that. But in the aspect of where it is, you are paying. And this is a mind blower, you are paying $61 for every dollar of earnings. In fact, let me just see. Yeah, and they're making money. But you're paying $61 for $1 of earnings. That is a monster number. There's no doubt about that. Inside the S&P, well, you know what's intriguing out here is the front page of a story today in the Wall Street Journal, folks, about the amount of buybacks inside the S&P and that it hasn't done anything. It's an outrageous number. This is the most amount of buybacks since 2007. That's where the tax, well, in this year, of course, you know, the companies, they're saving a fortune on tax. Guess what? They're buying all the shares back. Hasn't done a thing for the S&P, hasn't done a thing for the economy. Guess what? It's going to do a lot of things for all those executives inside those S&P companies. Because why? Because their bonuses are tied to those companies. Stay right there, folks. Got our man, Mr. Steve Rhodes, coming back next. Dow Industrials up 327, NASDAQ up 53, S&P's up 21. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials up 323, NASDAQ is up 52, S&Ps are up 21. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday. Don't forget, folks, Steve's got a great program here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, the way you get this newsletter, you come over to our website at TFNN, go to newsletters, go to trading newsletters. You can check it out, 30-day money-back guarantee. Steve Rhodes, what's going on?
Well, interesting day, because what I'd like to do is spend some time talking about the stock market hurdles. And, you know, with the Dow being up 300, I really think it's apropos when I take a look at what we're really doing in the stock market. And Tom, when I take a look at the Dow specifically, priced in either dollars or euros, this chart on the very left-hand panel of my screen is the Dow priced in euros. On the very right, the Dow in dollars. And you'll see the, well, there's a couple of things that we can see on here. First, you can see the boxes, the rectangles. This is what I consider to be the consolidation. And consolidation patterns can be difficult to trade because one day the bulls win, the next day the bears win out there, buyers or sellers, and there's a range. So even with the movement that we've seen inside of the Dow, and if you take a look at the Dow price in dollars specifically right now on the very right-hand side of the screen, we can see that these are monthly charts, by the way. We can see how this 23,934 level has held as significant support. Now, that happens to be a horizontal trading range level or primary trading range, as Bud Rolfe taught us. And so the Dow is, even with today's performance, still just inside this consolidation pattern in both euros and in dollars. And I think that that's important. What we can also do in this chart here, what I've done for the viewers out there, Tom, is I've just simply, instead of using bars or candles, we're just taking a look at the closing price for the Dow, for the S&P, for the NASDAQ in the lower left, and for the Russell 2000 in the right-hand column. And when I take a look at hurdles or consolidations, I heard you mention Twitter being in a high-end consolidation. If we take a look at on a daily chart out here, we can clearly see the Dow in its consolidation pattern on a daily chart. More specifically, though, it's very clear when we take a look at the S&P 500 to the right. It's very clear we take a look at the NASDAQ 100 lower left. It's also very clear we take a look at the Russell 2000 in the lower right. So this is a hurdle. Will price be able to take out these consolidation patterns? Or, and this is where I want folks to be careful out there, is because prices now, we're not there just yet. We're very close. But prices trading right up into a level that so far has acted as resistance out here. Taking a look at those, and you can see how the Dow is actually quite a bit weaker. Sure, strong today, up 1 3/10%. But with regard to the consolidation, we're going to get the message whether or not the market is ready to take out these consolidation levels coming from the S&P, the NASDAQ, and the Russell, not the Dow, not the place to focus on. And there's many other consolidations out there. For example, gold, something near and dear to your heart, my heart. It's in a large consolidation pattern. But what's really cool a couple of days ago was that it made a nice bottoming signal. I have found that in trading these consolidations, you want to be able to try to identify some type of signal at the top or the bottom. When I say signal, I'm referring to a pattern. In the case of gold, interestingly enough, one of your favorite patterns of mine, the A to B equals CD pattern, it completed what I like to call the buy the D point. Now here this shows a 1 to 1.272, just slightly below that as far as the A to B equals CD pattern. And when I say buy the D point, I believe that the role of the traders out there each day is to generate a bullish or bearish or some type of neutral candle. It's especially important to me, Tom, when we are at the completion of a pattern. So if I go back and I take a look at this chart here, just simply on a closing basis, knowing that gold was coming into the bottom of a consolidation area or potential consolidation, a prior swing point, if we then take a look at the A to B equals CD pattern, well, we see that the bulls showed up out here when they created that bull sash candle. That's really important to me. Now, the next level that's really important in order to suggest to us that, in fact, that gold is done moving lower, ready to move up towards the top of that consolidation, is closing above this 1260 level. My apology, I had a system problem before we came on the air, so I don't know exactly where gold is trading at the moment. But closing above 1260 or 1260.20, let's say today, would be another signal that gold wants to go ahead and move higher. This also shows...
We need 40 cents.
40 cents. That's an important 40 cents. In fact,
Totally,
I think a couple days ago, I think I just happened in the background. You and Tommy were talking. You're like,
Don't worry.
I can't believe it couldn't go $2 higher.
I'll buy some futures right now.
There you go. That's what it needs. So if it does get above, so we have what's beautiful about this couple patterns that are out here, was at the timing of it right back at a prior swing point.
Yes.
So it does appear that, hey, gold is at the bottom of its consolidation. It's always important to understand what type of market we're in. If we're in a market that's moving, that's outside of a consolidation, whether it's moving upside or the downside, much easier to trade than these consolidations. King dollar, you love King dollar. This is in a long period consolidation at this stage. Now, folks, what's nice about consolidation patterns is when they do break, it offers you and I a measured move, which is the amount equal to or greater than a consolidation pattern as to where things will move to. So, hey, if the U.S. dollar breaks out of this consolidation pattern, you know, it's headed back into the 100 type of level out there. But right now, still in a consolidation. The GDX, something that all of our listeners like to take a look at, it too is in a consolidation pattern. Again, these can be really frustrating out here. So the most important thing, Tom, is I want folks to be careful because consolidations are very hard to trade. They're often, as I say, one day the bulls have the upper hand, the next day it's the bears. You've got the S&P, you've got the NASDAQ, you've got the Russell 2000, which should reveal some really important information to you and I over the next couple of days. And it's always good when you're trading consolidations to have other tools, such as like the A to B equals CD pattern. Wave number 7 is another tool. A tool here that I'm looking at, which I think is also critical, this takes a look at the New York Stock Exchange. And the bottom panel on this, Tom, is the advanced decline oscillator reading. What that does is takes a look at the advanced decline information and compares the 39 and 19-day exponential moving averages. Then it goes ahead and gives us a result. The interesting thing is that when this reading gets up to the 150 level, what I have notated here in these red arrows are what I call these plus 150 failures. And you can see that in each case it leads to some type of retracement. Sometimes it leads to a fairly significant retracement. So it's a reason why I want folks to be careful. Earlier in the day when the market opened between 9:30 and 10, the reading on this got up to plus 157, and then it started turning down.
Okay.
So so when you put this together with the timing of these consolidations, no clear message whether or not this is going to break. If this, Tom, closes above, just like we talked about 40 cents in gold, if this were to close above plus 150, it would tell me that the market's getting ready to break that consolidation that we're looking at here for the S&P, for the Russell, and for the NASDAQ 100. So that's what I'm looking at when I take a look at the markets out here.
And when you say break it, do you mean come back off of it?
Close above it. Just
close above it. Okay, cool.
Yeah, if it closes above the 150 level, and there you can see there's this little yellow dashed line out here. It typically leads to higher price in the near future.
I got it. Listen, folks, come right over to our website at TFNN. Go to newsletters. You're going to go to trading newsletters, see Mastering Probability. Steve's the #1 market timer in the S&P. And bottom line, 30-day money-back guarantee. Steve, have a great one, safe one. We look forward to the show tomorrow.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We have the Dow up 328, NASDAQ up 58, S&Ps are up 21. And, you know, starting this Friday, folks, that is the big kickoff. Once again, it seems like earnings just keep coming. These time is just, I mean, it just flies. There's no doubt about it. And the banks are going to be kicking it off. And then once we basically kick it off each and every day, that's the amount of numbers coming out just accelerates. So we will see where a lot of these high flyer companies are. Let's just go over and take a look at a few of the tech stocks, see when they come out. Okay, so Amazon comes out the 26th. That's, what, a couple weeks from now. You get Facebook coming out on the 25th. You have Google coming out on the 23rd. Microsoft is coming out on the 19th. Intel is on the 26th. So you can see we start this Friday, it accelerates into next week. Bottom line is that we'll see what kind of money they're printing out here. There's no doubt that story in the Journal about the amount of buybacks is pretty incredible. Do you know what the incredible part about the story was, folks? I'll get the story and read just a couple of paragraphs in the next break. Is the last time that this happened, this is crazy, all these companies, they're talking about all these companies in 2007 before the crash, guess what? They were buying their stock back then too. So the bottom line is that they're using the amount of money that they don't have to pay taxes on, but they're definitely not. And this happened, I remember the last time that this happened was, I guess about 14 years ago, that the bottom line is the companies would always say, yeah, they're going to turn around and invest the money for more production, and bottom line is that they didn't do it then, they didn't do it now. The biggest buybacks, they put it right back into their paper. They're buying their paper back in order to boost their earnings, because of course if you have less paper in the market, you're going to have more earnings inside each piece of paper. That's how it shakes down. 877-927-6648. Let's go over and take platinum. Let's go take a look at platinum. So platinum out here, you're trading 853. This thing has just got smoked. You know, you go back 6 months ago, this was 1,036. Now it got off the lows. We traded down to $800 on Tuesday rather. Talk about a fast move down. Well, it was a fast move down, no doubt. Now we'll see whether it can handle the 882. 882 would get it back inside its larger range. It's going to have to do some heavy lifting here in order to do that. If we bring platinum back a little bit further on a continuous contract, let's just see where we're lined up here. Well, it's not bad, actually. Okay, so, yeah, it actually it went down to 796 in this contract. 812 was your swing point. Your swing point from 2008 was 761. So now it has this. It actually has the shot right now to go to 1199. You can't bust them down. Guess what? Now it's going to try to bust them topside. That being said, the 888 number is going to be a big number. It has to get back inside that number in order to really get any traction. The gold bugs index, we take a look at the, well, first let's do the XAU. XAU down 37 cents today. That being said, what's going to get intriguing here is that what you have here is this, is that you really are not moving away from the top of this range. The top of the range inside the XAU is 84.50. We hit 83.37 out here today. We go take a look at the gold bugs index. Gold bugs index trading the same type of setup out here. Gold bugs index right now is flat at 179. We hit 182 today, and your swing points are 182.60. And we hit 156, 182.60 to 183. The way both of these actually still look is that it looks like they do want to get into higher price. Inside that market, now this is what gets really intriguing. You know, we've had gold down from April. Okay, so it's been a one-way route on the way down. You come off the bottoms last Thursday and Friday, you know, but bottom line, it's been a route one way down. That being said, there's quite a few equities inside the gold market that basically have done really well. If we look at First Majestic, February 9th was a $5 stock. You're at $8.20 right now. We go take a look at an Eco Eagle, same type of setup. An Eco Eagle is trading at $46. That was a $38 stock. You get Royal Gold. This would be the leader right now. Royal Gold trading at $91.54. You know, Royal Gold was down at 81 bucks. You know, so those are a few that are strong. Rheingold Resources, this is having a hard time. Rheingold is down in the last 6 months from $103 to 76, and we haven't seen any strength there. You know, I want to see a sign of strength inside Rheingold. Franco-Nevada did get some strength last week. This is a big heads up. This is trading down $1.53 today. Yeah, someone's hitting this thing. You know, we got some strength last week, though. Well, if we go back 2 months, you went from $66 up to the 76. Today, you're pulling back, and this actually has some volume on the pullback out here today. Yeah, they're still selling these golds. Not all of them, but they're selling a lot of them down. Barrick, we take a look at the two. Barrick right now, that is flat. Newmont's also flat. Yeah, and it's going to be all about this good old dollar, folks, no doubt about it. What we did have over in London this morning at 10 o'clock Eastern Time is you had two of the ministers resigned. What that did is that put a little juice inside the pound. GB, let me get this, GB. Whoops. There we go. So we take a look at the pound over here. What you're going to see, look at that. Bottom line is that it really come back quite a bit, actually. So when that happened out here this morning, you had the British pound go from 133 to $1 US down to 131. To $1 US. Right now we're at 132.49, and actually this chart still doesn't, and this is where the deviance comes inside the marketplace. This chart doesn't look that bad. You know, we got off a low of June 28th at 130. You pushed into a swing point today. We don't have volumes inside the currency moves, but that's quite a bar. And it looks to me like no matter what is going to fly out there with the Brexit, and what had happened is that the hardcore Brexit folks, they basically, two of them resigned. So we'll see if Theresa May can stay in power. That's going to be a battle out here, though. There's no doubt about it. And we know that when Brexit actually went through, that threw a big spin into the currency markets. And not necessarily, it hit the equity market also, but the currency markets got hit first. Our phone number is 877-927-6648. We have the Dow Industrials up 322. Nasdaq's up 61. S&Ps are up 21. And this volume inside the NYSE is still anemic. So it's going to be intriguing to see what they can put in the next 15 minutes. We're at 439 right now. Coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 317, Nasdaq's up 62, S&Ps are up 22. So you just had May consumer credit come out. Total credit increased by $24.6 billion. And then the prior month was revised up an additional $10.3 billion. This is, let's see, so consumer debt rose in May the most in the last 6 months on non-revolving loans, credit card debt outstanding and non-revolving loans. The increase in revolving debt, which includes credit cards, shows consumers were spending more freely midway through the second quarter after slowing in March. The rise in non-revolving debt, which includes educational and auto loans, partly reflects steady motor vehicle sales. Lending by the federal government, which is mainly for student loans, rose by $4.1 billion in May after a seasonal adjusted. Credit increased at a seasonal adjusted annual rate of 7.6%. That's a monster number. 7.6% after, well, I guess every year there's more people, but you start raising credit by 7.6% per year. Bottom line, remember, you got to pay that credit down, folks. It's easy to get it. Now you got to pay it back. Pretty intense. The market out here, bottom line, wants to finish up at the highs. If we take a look at the Dow Industrials right at its high, up 322. You're trading at 24,777. If we go over into the diamonds, we just take a look at the diamonds because we're going to have anemic volume unless they can do something extraordinary coming into the close. You get 3 million shares going against 6.3 million shares inside the diamonds. Inside the indice itself, right now we're trading at a price, well, traded at a volume characteristic of 457 million. And that is this weak volume. Now, what I do expect you're going to see, we're going to, we'll see whether they can throw 300 million in there. If we come away with this with only 100 million and we're into 600 million, that's a big problem in paradise for that Dow Industrials. Stay right there, folks. We'll be coming back with some numbers after the close. Dow up 314, Nasdaq up 63, S&P's up 22. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Kicking into the middle of the summer. Create the perfect relationship between you and your body. Treat your body with all honor, love, gratitude, and respect. When you're making a goal to adore your body and accept yourself completely, you're learning to have the perfect relationship with anyone else you are with. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 320, NASDAQ up 67, S&P's up 23, and we did get volume in here, folks. Bottom line, this is what's pretty amazing, actually. You know, I was watching this volume coming into the close. It was the market at close that volume was explosive. We were at bottom line, 4 minutes of 4, you're at 450 million. Well, we did 758. In fact, let me just check that again because they can still put volume in the next 5 minutes. Yeah, you're at 761 right now. So bottom line, volume did come in into that NYSE, had the price spread. You know, the NASDAQ, I mean, the NYSE is still way off its highs. 26,600 is the high. So you're 1,900 bucks off of that. But bottom line is that you got some volume out here. Inside the Dow Industrials, strength. If we take a look at the strength in here, Boeing had put 49 points in. Goldman put 42. What you're going to see in here, the banks basically had some big traction out here today. Goldman put 42 positive points. You had J.P. Morgan putting 21. Let's see. Well, you don't have Wells Fargo inside the Dow, but bottom line is a lot of these banks had some good action. If we go over to J.P. Morgan first and take a look at J.P. Morgan, J.P. Morgan's coming out with its numbers this coming Friday. That was up $3.22. That's after basically hitting a low on Friday of $102. You're at 107 right now. Bottom line is they rejected this lower price point, so it's going to get intriguing to see what kind of juice we can get going to the upside. Bank of America did the same thing. Bank of America was up $1. You're trading at 29.05. They're coming out with their numbers on the 16th. Citigroup, same type of setup. All these banks moved. Citigroup up $1.80. That's coming out on the 13th with its number. And bottom line, we'll see whether they can continue to get traction at topside. All of those banks, folks, were at the lower end of the consolidation. It's been a huge consolidation, too, by the way. The last 6 months consolidation, the high in Citigroup was $80. The low out here was 64. 64 was just reached about 2.5 weeks ago. So we'll see what kind of juice they can get going forward. Gold contract. 1258.30. We go take a look at that contract. What you're looking at is this. We made it up to a price point of 1266.90. You had 230,000 contracts traded, but bottom line couldn't hold price. So we'll see where that shakes out. And what that's going to be all about, of course, is the dollar index. If we go over to the dollar index, we take a look at the index. What you're going to see, the index rejected lower price. We got down to 93,440. You're coming into the strength that was developed out here on the 11th, on the 14th of June. Bottom line, rejected it. You finish slightly in the green. That's saying you're going to get some kind of a bounce. So we'll see where this baby wants to bounce off to tonight. Some of the higher volume equities in this market out here today, and you had volume in the NYSE of 760 million, and the NASDAQ Composite 1.8 billion. You had Twitter down $2.50. We had Micron Technologies up $1.08. Apple was up $2.61. Citigroup was the big one one of the big ones inside the financials with volume. Let's go over and take a look at Apple. So Apple is going to be coming out with its numbers the end of July. You're trading $190.58. And this bottom line looks like it's going to go after its high again of the 194.20. You're laying right next to it. No reason it can't go try to tap it out once again. You know, Apple's been up here now for 3 solid months. You know, the first month we tapped out at 190.37. Last month 194, and this month it looks like it's going to be the same, 194. That's the way this has seemed to be setting up. If we go over to Google, we take a look at Google. Google is also approaching the top of its consolidation again. It's 1186. You're at 1154. Amazon, the king dog out here. This is just the ever-ready battery. That was up $28 today, $17.39. That high is 1762. So I do expect we're going to see that also get tagged. If we look inside the NDX 100, your strength was Baidu.com. That was up 4%. Ultra Salon up 3.3. If we go take a look at Ultra, let's take a look at Ultra, because some of these are just pure dead cat bounces. So the low for Ultra is 187. The high is 276. Still not bad. It's trading 250. Yeah, this made its way back. Oh, I see what's going on. Yeah, it's made its way back up, but the high is actually 314 in Ultra. Because this is what you have happening with an Ultra Salon, folks, is that their concept is fabulous. There's no doubt. Their concept, open huge box stores, sell premium products for a less expensive price, open it to the retail, not just to the beauty wholesale business or retail business. And, you know, they've gone from $2.7 billion in 2014. This year they expect to do $6.7 billion. That being said, what is happening inside the beauty and cosmetics retail business is good old Amazon is getting its mitts inside of that business, and little by little it's chipping away and getting people used to ordering online with a couple of clicks of the button. So that could end up being problems in paradise for them coming into the future because of those growth rates. To continue inside that NDX 100, American Airlines was up 3.2%. Tesla was up 3%. If we take a look at Tesla, that's trading $318. They, let's see, so their high is 389. That was only last week, I believe. And that came down hard. So, well, 373 was 2 weeks ago. I see. So their high out here was, September, September of 2017. So bottom line is that what Tesla is, you have a high-end consolidation out here. That's the way that this is laying out. Excuse me, folks. Microsoft, we take a look at Microsoft. Microsoft is trading at $101.85. That's right at its high. They are coming out with their numbers on the 19th of July. Stay right there, folks. Come right back. Our phone number is 877-927-6648. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And if you want to see, you know, it's intriguing. You know, our dollar index, folks, has ran, really well in the last 5 months. Now, inside that index, of course, what the index is made up is they're made up of your largest trading partners. So we're really talking about the euro, the yen, the pound, more than anything. What has happened, though, is that other currencies that the dollar is going against that's not inside there have absolutely got smoked. Now, if we take a look at the Turkish lira, it's pretty amazing, actually. Erdogan, who just got reelected, and he really is basically a dictator at this particular point. He just named his son-in-law as economy czar in the new administration. But if you want to see something that is absolutely amazing, in fact, what they did before he got elected, I believe, he's taken charge of, bottom line is that, well, actually, no, he did it after he got elected. So he's taken charge of the monetary policy and more direct control of the system. Now, I got a chart up here. If you want to see how a currency can depreciate, it's pretty amazing. 2008, it took 1.2 lira per $1. Right now, it's 4.7. And it's gone as high as 4.92. It was 4.92 when the election was on in May. Bottom line is that you can see that is, you talk about some destruction, man. It's pretty amazing, actually, that you can lose that type of value. Now, this is what does happen in a situation like that, is that if you're doing business inside that country, of course, what ends up happening is that everything's basically marked in lira, so you're not getting hit as bad wealth-wise. What happens, however, is that means that you've got to stay in that country, because what ends up happening is that your money is worth, basically 75% less in the last 10 years as soon as you walk outside that country. So it's pretty intense how these valuations can move. If we go up to Canada and we take a look at Canada, Canada right now is 1.3 Canadian dollars to $1 US. If we bring this back, what you're going to see is that this baby also fluctuates in a huge way. We go back to 2011. The Canadian dollar was stronger than the US dollar. It was one of the first times outside of 2007. 2007, we went down to 90 cents, meaning that a Canadian dollar was worth 110 to our dollar. No, 90 to our dollar. So bottom line is that that's stronger, much stronger. And from 2011, that has got dramatically weaker. Right now, we're at 131 to $1 US. It looks like, if we break this area, meaning we go topside from this particular point. Let me pull this back a little bit more. Yeah, you're at the top of the consolidation. That's what it kind of looks like. So this is kind of intriguing, actually, because you can go back to 2016 on the weekly. It looks like you're at the top of the consolidation, but hey, we'll see. And that, of course, is going to have to do with where that good old US dollar looks that it's going to be going. When they get out of whack too much, it is no doubt a problem child. The reason it's a problem child is that what you definitely have is that the amount of money that transfers over borders electronically, buying and selling equities, that in itself throws a lot of basically rocks into lower economies, higher economies, as well as the currency fluctuations that are inside it. So if we go over and we take a look at, here, I'll just put the FTSE up in the UK. Now, when you have that up in pounds, bottom line, you get it up there at 76.87. If we take that and we turn around and we put that into US dollars, what you're going to see is that the high was generated out here in January, at 10,975, and right now you're basically down here at this 10,187 level. So there's a huge differential inside of that, meaning that if you take US dollars, these indices are down anyway, but if we actually took them and then you do your currency correlation with it, you are in a big losing position. DAX in Germany, Bottom line, you know, dollar-wise, let me put this back. There we go. So dollar-wise, you're at a price point right now of $14,672. Your high, I'll have it there though, is 2,200 points higher. So you can see if you're swapping out currencies and markets, you better really understand what you're doing. What's blowing my mind for the amount of analysts that are out here, that they keep pushing emerging markets. The emerging markets folks have got absolutely smoked. And they've got smoked not only in the stock market, but what has happened is that their currencies have got smoked. So if you transferred US dollars into an emerging market, bottom line, you're going to get smoked both ways. Big, big problems. No two ways about that. We're going to take a look at the XLK, the technology ETF. That's trading at $71.60. The high out here is 72.43. So this baby also hanging right at its highs. And those tech stocks are going to be coming out with earnings not like 3 weeks. Banks start us off on Friday. They accelerate from there the following week after that. That's when you're going to see a slew of tech stocks coming out. Right now, the XLK is only about $1 away from its highs. If we go over to the SMHs, now the SMHs, they're trading 105.74, and a little bit different. That high there is at the 114 level, and the reason that this one is really important is that it was the semis that basically got this NASDAQ as well as the NDX 100 running topside in a huge way. Now that being said, we are at the same spot that we were in November of 2017 right now. You know, so you can see inside of the semis, you had a couple that basically came down. They came down pretty hard. You had AMAT came down from a price point of 60, you're at 46. LRCX, that was one of the first big chip stocks that came down. That's trading 177. This thing is down from 234. I think it's 234. Yeah, 234. So big number. Xilinx, XLNX. Let's see where Xilinx is at. Xilinx is down from a price point of 78. You're at 67. NVIDIA, which is a huge mover. That's not down that far because I think the high is 269. You're at 249. What NVIDIA did out here today is got into its gap. The bottom of that gap is 250. Now this is when you really want to watch, and this is why. NVIDIA went into the gap. The bottom of the gap is $250.33. We got to 250.72, but yet we closed at 249.25. Now the way that trades, that's saying, okay, it did what it wanted to do. We'll see whether it can get up any higher. But when you do that, meaning you push into the low of high bars, you don't hold price, you have lighter volume, that's where you can get a turn pretty quickly. Stay right there, folks. Come right back. We headed out, finish up 320, NASDAQ up 67, S&P's up 24. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished up 320, NASDAQ up 67, S&P's up 24. If we go over to that NDX 100 and we take a look at it, it's laying right beside its highs. That closed up $68 today. So your closing price, let me just see this. So last closing price was $72.80, and that's the highest. Yeah, let's see. Yes, $72.80. So bottom line is that you only closed 4 points below its all-time closing high. The actual high is $73.09. Bottom line is that this market's going to go for it, because if we take a look at Facebook, what you're going to see, Facebook was up $1.51 today. That's an all-time high. Yeah, 205.80 was the all-time high. Amazon is right next to its all-time high. That all-time high is 1763. We hit to 1739 today and closed at the high. Google, which was a laggard, okay, so Google took quite a while to get going. This is only $30 off its all-time high. And when that got going, it certainly really put some juice underneath it. Microsoft, same type of setup. Microsoft, the all-time high in Microsoft out here is 102.69 or 101.85. So bottom line is that it looks to me like that not only that the NDX will probably get up there, you'll probably see that thing get spiked, meaning you get a consolidation that we've been in for like 6 months. It got above it about 4 weeks ago for a couple weeks, came back down underneath it, going to test it again. The real question is going to be, do we test that with volume or without volume? Because what we definitely do have is that you have a very small amount of equities that have taken those indices to all-time highs. There's no doubt about that. Inside the S&P, you're talking all about the 13 to 14 equities that have to do with most of the gain inside the S&P. You know, the S&P right now is actually down for the year. I think it's down. Let me just look at this for a second. And you get Amazon up 45%. So let's see if I bring this back on the 9th. Let me just bring this back. There we go. So if I go to January of 20, yeah, so let's see. Yeah, we're up about 3% on the S&P. And so what you have here is that Amazon's up 45%. You can see you get a couple of those big equities underneath your belt, yeah, you're going to be up in a big way. You get the indices, different ball game out here, different ball game altogether. If we go over to the Russell 2000, we take a look at Russell 2000. This also is right next to its highs. This looks like it's also going to take out its highs. The actual indice, 1708 is the high. Closing high is 1706. And we are at 1704 right now. So this little baby also does look like it's going to get up and over that. And what I expect we're going to see, more than likely, we're going to see that tomorrow. Last night in China, what you did have is that China came off the lows last night. First time it had any traction in over 6 months. You had the Hang Seng up 1.3%. Shanghai was up, 2.4%. Nikkei was up 1.2%. If we go to China first, we take a look at the Shanghai. What you're going to see, that was up 67 points. And this has been a one-way route. We were at 35.87 6 months ago. You got down a price point of 26.91. That being said, Shanghai is still in tough shape. Bottom line is that this has been going down since June of 2015. And that is with huge amounts of restrictions as to what you can actually sell as an investor once you end up buying it. Because if you remember in 2015, the Shanghai, well, the Chinese government put huge amounts of restrictions on the selling of equities. The reason being, well, the reason being is because they didn't want them to go down any further, which it just slowed down the amount that it can actually go down. And Shanghai is still in tough shape. If we go to the Nikkei in Japan, we take a look at the Nikkei. That got a small bump last night. That was up 264 points, trading 22,054. That being said, this looks to me like you're still in a consolidation. Yeah, you get a high-end consolidation, but you still get a consolidation. If we go over to the yen and we take a look at the yen, what you're going to see with the yen right now is trading at 110 yen to $1 US. And bottom line is that where we have had divergence is this. The divergence inside the yen, normally what you're going to see is that this yen didn't get that much weaker last night where the Nikkei did. It's normally where the yen goes, meaning if the yen gets stronger, Nikkei gets smoked. If the yen gets weaker, that's when the Nikkei can get some traction. What you will be hearing about, now this is where it's going to get interesting with the TAFs, the dollar, the yuan, dollar bonds. And this is what it is. So what has happened for quite some time is that many countries and sovereigns were taking dollar bond loans. Okay, so what that specifically is this. Let's picture you're in China and you're floating a debt structure, the bond, and you're floating it out and you put it in US dollar terms. Now the reason they were doing it in dollar terms is that the amount of buyers, were much heavier because of the fact that it's the US dollar, and they knew that they were going to get dollars back. Okay, so check this out. So what you had out here, basically since last night, I think the market is trying to recognize right now, and it's saying specifically over in China and the yuan, is this, is that the expectation from our own bankers in the U.S. is that the dollar bond loans, or basically debt, is going to go down dramatically because of the fact that they don't want to basically be hung inside the U.S. dollar when I don't think anyone really understands just yet how the TAF situation is going to blow out and what currencies will get stronger and or weaker. You can make the case that this dollar rise has been quite a rise in the context that first we get a tax cut, you get the debt going through the moon, then we're going to have a trade war. We're in a trade war. That more than likely is going to basically bring taxes higher because TAFs are taxes. That's the bottom line, folks. When you're reading all these articles about who's going to pick up the tab, guess what? You're picking up the tab. Companies, they're not going to pick up the tab. It's not even close. Ford Motor said they're going to pick up the tab for a few months. We'll see how long that lasts. The rest of them, we're going to pay the price. When you have an aspect like that, two different things fundamentally should happen inside the dollar. The bottom line, when you have a debt structure that's going through the moon because of the tax cut, which is kicking in, meaning that the debt structure is kicking in, that should weaken the dollar. Then when you don't have the amount of folks wanting dollar bonds, that basically brings it down also. The ironic part of all of this, of course, when they were doing the tax cut, they were explaining that they thought the companies would invest in the economy. Well, guess what? The facts are in. They're not invested in the economy. They're buying their own stocks. Check it out. Wall Street Journal today, front page. Come right back, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So I just talked about the stock buyback. So check this number out. This is an amazing number, actually, folks. So the S&P 500 are on track. The companies in the S&P 500 are on track to buy back $800 billion in stock this year. $800 billion with a B. That is going to eclipse the 2007 buyback bonanza. Now check this out. Let's go do this, because this is what, to me, it wasn't the case of them buying their equities back. I felt that they were going to do that anyway. They always claim one thing, and bottom line is that they always buy equities back and push dividends because all the executives get paid on the price of the stock, folks. So it was the exact same rap the last time, And guess what? They didn't put it into jobs. They didn't put it into equipment. They put it into the paper. And that puts huge amounts of money into the executives. So I got a chart up here of the S&P. And I bring this back. So we're in 2018. The last time this happened was 2007. That's 2007. In October of 2007, your S&P is at 1576. And of course, we know what happened, right? 2 months, the high was 1576. Bottom line is that within a year and a half, you were down to 666. So what did they do there? They bought all the equity back at the high of the market because the S&P in 2002 was only at 768. You know, the run was pretty wild there. 2002, you're at 768. You run all the way up to 1576. So you did about 100% run. Okay? Then what do? We basically crash and you go down more than 100%. Okay. Now, this run here is one of the largest ever. Bottom line is that we run off 666. We are up at 2784. And what are they doing? They're buying 800 billion. The part of the story that is important to wrap your head around is this. In fact, no, I'm going to keep this up here because let me show you something. This is pretty cool, actually. So when you bring this back, what you're going to see, even in 2007, is that, let's see, so I'll go to January 2007. So let's say that the stock buyback in 2007 started at the S&P of 1441. So you go 1441. It tops out at 1576. So you topped out 110 points higher than that, right? That's not even, it's about 8% higher than that. So the whole time, the S&P 500 companies were buying the stock back, holding the price up. Once that money was gone, guess what? Ba-boom. See ya. 1576 down to 666. Okay, so now let's go back to 2018. We start 2018 off. We're halfway through the year right now. They've been buying stock left and right, and guess what? We're up 3%. That's a problem, folks. It's a huge problem, you know. Take it for what it's worth, but my take on that, same type of setup, distribution at highs turns into problems. Now, we've heard plenty of analysts saying that, hey, listen, small caps are totally where it's at. The reason why small caps would be where it's at has to do with the aspect of the trade war. Well, you get Morgan Stanley had come out and they challenged that thesis. Now you had Barclays out with them today challenging the thesis. So let's see what they have to say. Two Wall Street strategists casting doubt on one of the year's most popular trades, buying small caps. Now, the Russell 2000, folks, is up good. It's up 11% this year. So that's 3 times more than the S&P. That being said, let's see what this one analyst has to say. He's claiming, don't be fooled by the consensus that smaller companies are better positioned to weather global trade war. While it's true that the domestic focus makes them less vulnerable to trade barriers, their biggest reliance on imports, means they're susceptible to a deeper squeeze in profit margins. That was an analyst at Barclays. At Morgan Stanley, Mike Wilson advised investors to trim holdings in the small caps. The latest outperformance in dividend stocks such as utility signals a reduction in risk appetite, a trend that's likely to continue and bode ill for small firms, he said. The firm downgraded the group to equal weighting from overweight. Here's his quote. While we have been expecting small caps to do better this year on faster relative earnings growth, much of this relative growth has been priced at this point, Wilson wrote today, in a note Monday today. We're also becoming concerned that the small caps may be getting too much of a tailwind from rising trade tensions. The Russell 2000 has rallied 11% this year. Small cap gauge added 0.6% today as of 2 o'clock. Exports, okay, to compare the trade impact for small versus large companies, it's wrong to simply look at the proportion of sales from overseas. The analyst from Barclays said, because many multinational firms own foreign businesses that are not subject to tariffs. Exports, the amount of goods shipped out of the U.S. is a better gauge, he said. Going by that measure, small companies still show a smaller exposure, but the gap to large caps is much smaller. At the same time, the cost side of the equation puts small caps at a bigger disadvantage. All considered, they end up being more vulnerable, according to the Barclays study. So, you know, bottom line, like anything else inside the market, you get the bears, you get the bulls. We'll see where this thing shakes out. The thing that's intriguing, folks, is this, is that the last time you had a full-blown trade war was in the Depression, right before the Depression. So there's really not a lot of folks around that understood what trade wars do to basically stock prices. You know, thus far you can see, you know, every night you go home you hear the news saying, okay, the trade war started, markets are still up, no big deal. Well, bottom line is that you know that markets are all about supply and demand. If prices go up, it's going to be inelastic. Well, it's going to be elastic, but bottom line, the elastic breaks, because we all only going to pay so much money for a product. What has happened, and I say this is where one of the bigger deals are, we've been used to paying the same amount for a product or less for a product the last 30 to 40 years. And that is because of the amount of goods that are made in China. That is about Walmart. That is about all the large firms that make everything in China, ship them over here. And so we have been paying very inexpensive prices for things that, if we look back 35 or 40 years, were more expensive. Bottom line, is that going to change? And I suspect it's already changed for some folks, and it just depends on how many more tariffs get put in place and where that good old trade war continues. I would say that our biggest problem is that once you're caught in a bureaucracy, which this is, it's trouble in paradise. You know, it's real easy to start things. It's not easy to end things. And bottom line, this train has left the station. And guess what? You know, when folks say that, oh, we don't have to worry about this, we don't have to worry about that, you better worry about everything. Because the bottom line is that if you've traveled around at all, the United States, okay, is, I would say, the best country out there. But it's not the be-all, end-all of manufacturing goods. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If we go over to Lowe's, the department store, that home improvement store, the low for the year 70, the high is 108. That's trading at 96 right now. Now they got a new CEO in there, and he just cleaned house. Holy cow, this just came across the tape. So Lowe's says that their chief operating officer, the chief customer officer, the corporate administration executive, and chief development officer positions have been eliminated. Responsibilities formerly under eliminated roles will be assumed by other senior leadership roles that will report directly to CEO Ellison. Bottom line is that that no doubt is a quick move, eliminating the whole top structure. Lowe's right now is trading at $96.96. They are going to be coming out with their numbers on the 22nd of August. Revenue-wise out here, they did $68 billion last year. They plan on doing $71 billion this year. They're growing by 6.8%. Let's go to Home Depot and see what that matches up with. So 6.8%, that's the number. Oh, see, Home Depot's not bad, man. Home Depot's 6.6%. So same type of number. Now, the difference with Home Depot is that that chart, yeah, the chart's a little bit better. Well, they're both right next to their highs, actually. Home Depot high is 207. You're out here at 196 right now. So in both cases, it's pretty close to where their highs actually have been. And if we go take a look at this, it's pretty amazing, actually. 2011, Home Depot is at $28. You're at a 196 right now. And let me just see this. And you get a dividend. So on top of that, you get a dividend of 2% per year. That's a big number. Let me see Lowe's, what their dividend is. Yeah, 2% also, 1.98%. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here. 8 o'clock tomorrow morning. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
This is TFNN, the Tiger Financial News Network. TFNN Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials finish up 320, the NASDAQ up 67, S&P's up 23. Percentage-wise out here, you had the Dow up 1.3%, NASDAQ as well as the S&P up 0.9%. Inside the commodity markets, what we had out here, you had the unleaded gas up 2%, trading out at $2.15 wholesale a gallon. We had heating oil up 1.4%, trading at $2.19 a gallon. Copper was at $2.87 a pound. Gold contract out here at $12.58.80. Bottom line, gold had been up to $12.66. Gave it up on price again, pulled back. Bottom line, gold up 0.4%. Silver was traded up 8 cents, $16.15 an ounce. Notes and bonds. So note and bond market, folks. 10-year note down 7 ticks, 120.04. 30-year bond down 17, 145.04. Now, both of those pull back with dramatically lighter volume. That's after the 30-year went after its swing high last Friday. I expect we're going to be right back up into that level. The 10-year yield right now, we are at a price point in the 10-year of 2.856. When you take a look at the last 3 months, the high of the 10-year last 3 months is 3.11. The low is 2.78. So bottom line is that we're at the lower end of that curve. And we'll see whether that continues. King dollar rejected lower price, did have lighter volume. So King dollar once again looks like it's going to try to make a run topside. We did 17,000 contracts. You're going against the strength out there from the 14th of June. Bottom line, rejected it. and we'll see how this shakes out tomorrow. King dollar right now, we're at 93.830. That's saying that the King dollar can make a run into this approximately 93.8. Well, no. Yeah, they can make a run to 94. 115. The high in King dollar right now on this index is up there at the 95.220. What has happened with King dollar, each and every time it gets into that 95 area, which is the highs of October of 2017, bottom line, has failed on price and volume. Stay right there, folks. Going to be coming out with some numbers in the next hour. As a recap, the Dow Industrials finished up 320. NASDAQ is up 67. S&P's up 23. We'll come right back.